Hey everybody, welcome to this episode on futures funding. I'm going to talk about the 4 different firms that I got funded with in under a month, the different rules, and some of the trades that I took in order to pass. So let's dive into the different firms and some of their rules. So obviously the first one is going to be Top Step, one of the most reputable firms out there. They have an end of day drawdown, so their 150K account is about $150 a month. And once you pass, they have an activation fee, one-time activation fee. It's the same price for the activation across all the account sizes. So I'm going just through the most important rules that I think everybody should follow when they're trying to pass these challenges. And then each firm has their own payout structure, so you guys could kind of look into that on your own. Some of them require you to hit certain amount of days in profit, and then some other ones require you to actually build a buffer of the drawdown before you're able to withdraw. So Top Step has an end of day drawdown that essentially means that at the futures market close, it's going to recalculate what your balance is compared to the previous day, and based on that, you're going to be either in profit or in loss, and that's the end of day drawdown. With the 150K account, we have a $4,500 our $4,500 max loss and then $3,000 daily loss. The good thing about the daily loss is if you get stopped out on the day for 3K, you're not breaching the account. You still have a little bit of room left to pass that challenge. The consistency rule, you can't have a day greater than 50% of your total profits. So for example, if the Top Step 150K account has a profit target of 9K, you can't have more than $4,500 made within a single day. And when I get into the trades, you're going to see me kind of close some of my trades out at $4,000 on the day. So the scaling rule is only on the funded account. So with the funded account, as soon as you get funded, they're going to reduce the amount of contracts that you can put on. So that's one thing to keep note of. It actually benefits you to trade smaller size once you get funded because you don't want to over leverage. Whereas some of these trades that I took were a little bit on the more aggressive side just because I didn't want to take too long to pass them. And I can afford to pay for resets if I did fail. So they do have news trading allowed, which is also a bonus. Then the next firm down here is going to be Elite Trader Funding. So I got three Top Step accounts, 3 Elite Trader Funding accounts, which at the time when I signed up, they were doing a 90% off sale. So essentially I only paid $90 a month for the 250K end of day drawdown account. They have multiple different accounts. They have a Diamond Hands account where you can hold overnight. They have a Fast Track account. They all have different parameters, but the one I chose was the end of day drawdown because I think they're the most favorable, and they have some of the largest account sizes on that plan. So with the end of day drawdown, very similar to Top Step. The consistency rule is 40% of total profits, but that's only on funded accounts. So on the challenge accounts, essentially I could have passed all of them all in one go, but that wasn't my goal. I kind of wanted to treat them more conservatively and not pass them all in just one trading day. So, scaling rule, they don't have a scaling rule. But again, if I was using a trade copier, once I hit the live funded stage, the thing with Top Step is they kind of limit you, so it kind of forces you to trade conservatively. Same thing with the news trading. The news trading is allowed. And this is one of the firms where you have to build the buffer before you're allowed to withdraw the profits. Now, Apex is probably one of the hardest ones to pass, and this is kind of what I based a lot of my trading around because I used a trade copier. It's called Replicanto, and I'll put a link in the description for you guys. And there's a great guide that one of my friends shared with me on how to connect all these accounts in NinjaTrader. That way you're not managing 30 accounts all on your own. So, essentially if you take one contract in one account, it's going to copy to all the accounts. And it's pretty easy to set up. The Replicanto just has a one-time fee of $200, and I essentially was trading all my accounts as if they had an intraday unrealized trailing drawdown. So what is intraday unrealized trailing drawdown? It's basically if you go up in a trade and you don't close it and it comes back on you and it stops you out at say break even or even at a loss, your trailing drawdown is actually going to be impacted by that. So let's say if you go up $300 and then down to get stopped out at $100 loss, just for example, you're actually going to be down $400 on your intraday unrealized trailing drawdown because your highest equity peak hit plus 300, right? So it's really difficult to manage that drawdown, which is why I think it's probably one of the hardest ones to pass. But if you trade small enough and you take your profits pretty quickly, you shouldn't have any issue because they're giving you a 5K, at least on the 150K account, they're giving you a 5K intraday trailing drawdown. So if you're up 5K and you lose 5K, well, it's counting against your drawdown. So with that, you kind of have to aggressively take profits as the trade goes in your favor. And, luckily, some of the trades that I've taken, they've really ran kind of on a market open. So I didn't have to worry about any pullbacks. So that's something to keep in mind is when you're trying to pass Apex, you have to make sure that you're going to scale out pretty aggressively as the market's going in your favor. Consistency rule, best day below 30% of your total profits, only for funded accounts. So what you do is take your total profits. So on Apex, you have to make 5K plus $100 in order to withdraw. So 30% of that 5K gives you the total amount that you're only allowed to make during that specific period in order to withdraw. So that would be like $1,500 a day. So you can't make more than that to be able to withdraw. And then lastly is my funded futures, the expert plan. Same thing, end of day drawdown, consistency rule. They don't have one. And I went with the expert plan because they have unlimited payout cap once you pass the funded account. So some of the firms, they actually cap the payouts on each account. So the max, my funded futures expert account does not do that. But the one thing I will note on my funded futures is that there's no news trading on certain events like CPI, FOMC, and FP. So they have in their FAQ section on their website, you guys can take a look. They have certain tiers of news events that you could trade, and the ones that you could trade typically outside of these three, are just regular high impact news events, as long as they're not like random gambles. I don't know how they're exactly determining, what's a random gamble or not. So, it's something that you could possibly look into, or just kind of avoid trading news events 2 minutes beforehand, 2 minutes afterhand. Now, when it comes to the sizing, the micro contract, right? So on ES, there's 4 ticks per each dollar move or handle move. So there's 4 ticks. That would be, about $5 of risk per dollar movement in the ES. And then a mini contract is essentially 10 times that risk. So one mini contract is equal to 10 micro contracts. So just keep that in mind when you're trying to position yourself appropriately and not take too much risk, because a lot of these firms allow you to take way more risk than I think most people should be. Like some of them offer, 20 to 24 mini contracts, which is, in my opinion, insane. Even just 1 to 2 mini contracts is enough to be able to pass these challenges in a week, 2 weeks, if you have a string of good trades. And I'll kind of show you guys that when we dive into the trades. So with that being said, let's go back. I have this video of all these trade breakdowns, and I'll break them down just from a strategy standpoint and kind of how I'm getting along as far as balance. For some reason, I recorded this trading view, but I did take all the trades in NinjaTrader as well. So when we get to trade 2, you'll see my balance is shown in Replicanto. So just to briefly go over this one, we've got our Monday low. We took out sell side liquidity on Tuesday. Right, we had a break of structure here. So let me just mark this up. So we had our Monday low here. We had sell side liquidity taken during New York session, as well as the Monday low liquidity. And then we had a break of structure here, and then fair value gaps in here. So that's what I entered on. I saw this break of structure here, these fair value gaps. So I didn't actually enter over here. I was over here. I just didn't plot my long short tool like that. And then these are deviations of the Asian range. So you can see that we hit the second standard deviation here and traded higher. So really, right, we have our sweep on liquidity, right? That's our sell side liquidity. And then we have a break in structure, and then this is our fair value gap in somewhere in here. So once I see that fractal forming, once I see that break of structure, I'm finding the fair value gap and then using that to trade higher. I didn't record this trade all the way, but you kind of see on the 1 hour time frame. This is a high time frame PO3 indicator by 2 degrees. If you guys want to take a look at that, it essentially plots all my hourly candles on the lower time frame, and you can see up here that I was using the 5-minute time frame to enter. So this is crude oil futures. This was actually 2 mini contracts, and I exited right around here. So it's about like a 1-to-1, 1-to-2. So I risked a little bit more, right? I'm risking closer to $1,500 to make a little bit more than that. So that first trade, put me up a decent amount. Let's see if I have anything else in here on the 5-minute time frame. No, I was just looking at the daily chart just real quick. I think I missed a trade. So that trade netted me about $1,500. I think I missed recording a trade in here. You kind of see this is my Replicanto. I have all my accounts connected in here. So Top Step is actually a rhythmic account in NinjaTrader. So the thing with NinjaTrader is they only allow one rhythmic connection. So you can't use, and for some reason you can't use Top Step Tradeovate accounts on NinjaTrader. Like it won't let you connect. So if you were to, let's say, pick Tradeovate on Top Step, that means you wouldn't be able to connect Top Step plus another rhythmic connection. So Apex, ETF, so Elite Trader Funding, and then My Fund and Futures, these are all Tradeovate accounts, right? Because you can have unlimited Tradeovate accounts, and then you can have Top Step, which is our rhythmic connection. All right, you guys can see I'm taking the same position across all my accounts. So these all have pretty much the same profit. You can see they have roughly $3,800 in profit. This is the second trade that I took. So I didn't put all of the lipstick on this chart, but this is kind of what I was looking at. Let me just rewind here. This was just an order block I was looking at. I think it was an order block on the 1 hour. And then I think we had an inverted fair value gap in here that I just plotted right there. All right, so I have an IFVG. And when we get a little bit further into the video, I'll talk about the liquidity that we had taken out. So all these trades, I'm waiting for some level of liquidity to be taken out. All right, so let's mark this up. This is Asian range liquidity. So we took out that, trading into this fair value gap as well. We have this inverted fair value gap as well. All right, so when I come to the charts during New York session, I already understand that we've taken out liquidity. We have this inverted fair value gap right in here. And we have this fair value gap that we traded to, and we traded higher. So we have this fair value gap as well on the hourly. So I entered right here. So I actually entered 5 contracts here and then another 5 here. So that's why you see I have 10 contracts in total. And I'm just aiming for that previous day's high, a little bit higher than that. Sorry, I don't know if I mentioned if this is crude or not, but this is actually Euro futures. So 6E. So that first trade was crude long. This one is a Euro futures long. So let's play. All right, so all of these trades, very similar concept. I'm looking for a liquidity sweep, a break in structure, and then a fair value gap somewhere in there. So this was my market structure shift here, and then the fair value gap was in here on this hourly. And then I'm targeting liquidity above the market. You can see I have I just closed 5 contracts, so I went from 10 down to 5. See that I closed out half my position above the previous day's high. We have PDH here, previous day's high. I closed out my position, moved my stop loss up. Right, as soon as we broke that high, moved my stop loss up in profit. I still have 5 contracts open. Fair value gap in here, aiming for 1.08600. I was just checking the Forex Factory news calendar, see if there was anything coming out. Previous day's high. All right, so once we purge that previous day's high, I'm aggressively moving my stop loss up, trailing based on the lower time frame. I have that fair value gap. Again, move my stop loss up even more. So the worst thing you could do when the market is up this much, right? It's almost in Forex terms, 30 pips, right? The worst thing you could do is let this trade. Let's say if we poked the daily high and then ran all the way back down, then you're giving back a lot of profit. All right, so I sold some more. I sold 3 more contracts. So you see I have 2 left. And then the final one, I'm waiting to hit that profit target. There we go. So that's trade 2. It might have been trade 3 because that first crude trade, I don't think that was a 3K trade. I might have missed one of the recordings. So this is our next trade. Let's say this is our 4th trade. If I did miss a trade. Very similar situation. I'll just pause real quick. We have this inverted fair value gap, and this is on crude again. So we have an inverted fair value gap. When I came to the markets, I was looking at this. We already broke past it. Sell side liquidity raid. OTE was down here based on a much higher time frame. And then I'm looking at these equal highs up here. All right, so there's a lot of resting liquidity above these old highs, buy side liquidity. And then when we traded down in here, this is like right around New York Open. I went long in here after the rejection. All right, we can kind of see based on this swing low to this swing high, we were traced back to almost to 61%. As long as we came below 50% equilibrium, and you can kind of see how nicely we bounced off of the discount low of this inverted fair value gap. Right, look how beautiful that is. I wish I got in down here, but I didn't time it properly, and this thing just ripped really with no market structure. So it was based on really an hourly time frame. And I had to run at some point, so instead of waiting for the full target, I moved my target down because just based on my risk reward, I was only aiming for like a 1 to 2 just because I had to run. But very similar idea. We're using a fair value gap, we're using a run on liquidity, and we're using OTE or market structure. So this is really showing me that this is a higher low based on the higher time frame. Skip ahead here. I was just kind of measuring out what my risk reward would be. I believe it's just aiming for like a 1 to 2. So I was aiming for, let me just pause this again. Why did I put my target there? If you see this candle right here, you see how there's no wick on it? That to me is inefficient price action. There's also no wicks above this one or this one. So I think it would have gotten all the way up here, but because I had to run, this is like right around 10 a.m. I was on my way to like a cold plunge session. So I just moved my target down. And you can kind of see like the daily P&L. Just because Top Step has that consistency rule, you can't make more than 50% of your profits, of your total profits in a single day. If I had my target all the way up here, I think I would have broken it. And there was no way for me to manage the trade while I was out, doing whatever I was doing. So as you can see, based on those last couple trades, I'm at 156,000. This one is up $900 currently, and then on that specific day, 3K. So I'm very close to passing all the Apex accounts and the Top Step accounts. So I made about 1.3K on that trade. You can see I closed all of them out, and my balances are $7,250. This trade ended up being a break even. So I didn't get I don't think in this recording I didn't get a chance to show you what this green line was. But this larger green box in here was a 1 hour fair value gap. So we had our 1 hour fair value gap, right? We had taken out liquidity right at 9:30. Took out liquidity, market structure shift. I was looking at this buy side imbalance, but we traded a little bit lower than that. I think I, took a small loss here as well, which I didn't get a chance to record, but I was able to re-enter over here. This is Euro futures. 1 minute chart. And at the moment, we were kind of approaching lunch hour, and I really tightened up my stop loss and my take profit just because it was just moving sideways for so long. You see, I just noticed I just jammed my stop up to break even just because I did not like the price action in that given moment. So this is what I was looking at. This 10 a.m. open lack of wick was right here. And I thought we were going to really push higher, but you're going to see we punched above it. So this was 10 a.m. open. You can see down here, 10 a.m. open. Lack of the wick here. So I was really expecting this was going to be long, and then this would just keep running higher from here, but we punched above that level here, printed a wick, and then just collapsed back into the range. That's kind of why I was really not happy with this price action. It was really just sideways. The time, we're coming up on like 11:30, almost lunchtime. And I believe I just get stopped out at a small loss right around here. Yep. Let's fast forward a little bit. Going into the lunch hour. So we're right in the lunch hour. I took another long just based on that same idea, right? So we have this inverted fair value gap actually. So that inverted fair value gap was what I was noting from way back. It's not shown on the chart. You guys can always take a look at this. This is February 22nd. You can kind of go back and look at that level yourself if you want to. So I re-entered right around lunchtime. The last hourly candle had a nice long wick. I was just aiming for like a 1-to-1. So the 1-to-1 would essentially put me very much close to the daily limit, the daily profit limit, because I didn't want to make more than $4,500 this day. This is more like a scalp position. I think it's about a 1-to-2 or 1-to-1.5. So going into the afternoon session, got a bit of a push higher. You see, I can't go over 4.5K on the day due to the top step profit target rule. 75% scaled out there. So let me just pause that. This is kind of what I was seeing. All right, sell side liquidity raid, market structure shift, fair value gap. All right, and this is all on the 1 minute time frame. All right, so if you can find a way to get tight stops in here, it's very much the same concept that I'm using across all these trades. We have a sell side liquidity raid, market structure shift, displacement, entering. You don't have to enter perfectly, right? Even if I entered here, my stop is down here. I don't have to worry about the, the small fluctuation down, right? Because the risk reward is still decent. Move my stop up to that fair value gap. Got stopped out there. So 3.9K on that day. Let me see. So $1,500 to go, and then this next trade will get me there. So fair value gap. This is actually right at the time of entry. You see me entering all those positions. I only need $1,500 to go. Let me just fast forward and pause it so I can show you the actual setup that I was taking and why I went short. All right, let me pause. Oh, ahead. So here's our trade breakdown in here. I had these two fair value gaps, so this one in here and this one as well, and we took out buy side liquidity. All right, and then we have this inverted fair value gap. That's kind of what I was entering on. I did not wait for any type of displacement on the downside. All right, when I see this fair value gap being violated right here, I'm entering a short position a couple candles later. So I hope you guys are taking note of everything that I'm doing in order to frame the trade, as well as my stop management, my entries and exits, where I'm scaling in and out, etc. You guys can see I was very close to passing here. I think $300 away from passing. Sorry, I was seeing a ton of windows just moving back and forth. I was actually chatting with somebody in WhatsApp. So apologies if there's any edits and screen cuts in here. So that was me closing out the trade, right? You guys can see I passed all the Apex accounts. So 9K passed on all the Apex accounts. And then all the Top Step accounts, same thing, 9K. And then the My Funded Futures accounts I actually passed a couple days later. Still working on the ETF accounts as they have higher profit targets. So My Funded Futures is about 12K. And then ETF is 15K. So it's a little bit more as far as profit target. So, take your time. I hope you guys really found this insightful. It's really just a trade breakdown on how I passed all these challenges all at once. Like, I'm using Replicanto to copy trade on all of these. So with that being said, I hope you guys have a great one. If you have any questions or comments, just leave them in the comment section below, and I'll see you in the next one.